you. Thanks for coming.
Yeah, thanks for having me on.
We'll wait a couple minutes till 1 o'clock. Everyone tweet it out, ping everyone in here. Let the room fill up a little bit.
Yeah,
Max, how much time you got allocated today?
I could probably do an hour and a half, or I'm pretty much free till 5. But yeah, I mean, I got some time.
Yeah, it sounds good. We usually hang out for as long as you want to, and
sure.
If you have to take off, that's fine. Just let everyone know before you leave, and then the plebs usually just hang out here and chat all Friday afternoon, so that's good.
Yeah, for sure.
And I don't usually record these, but you got your podcast set up, so you're recording it, aren't you?
Yeah, I'm recording it, so I'm live streaming it, so it's on the audio. So it's just me sitting here. So I don't know if people probably shouldn't watch it, but for people that aren't on Twitter, it'll be on YouTube right now, LinkedIn and Twitter, live streamed as well and recorded. And then I'll probably upload it to the pod.
Cool. Don't be scared if some bad words get said or anything. Hey,
no,
you can edit that out.
No, I'm not editing anything. I'm just gonna post it. It's live streaming. It's live streaming, so it'll be there. Whatever here is, it'll be on those platforms. So I'm good with it.
Right on, man. How's my audio coming through? Can you hear my miners going?
I can't hear them too bad. No, I just unplugged one that I have in this room. But no, I can't hear yours too bad. Yours sounds all right. Can you hear me okay?
Yeah, it's perfect. I was up till 1 a.m. last night drilling a bunch of more holes in the back of my shop so I could vent them out, get the hot air vented out, and get some insulated ducting on there. So now, because it's like my office and my shop and my man cave and then the hash cave in the back, but I'm able to like shut the door on that now, and it's like at 50 dBs at my desk now, so I'm hoping I can leave them running all day.
Yeah, for sure. That's awesome. I need to get like a better setup for mine, the one I have in my man cave. I'm probably going to move it. I just got the 220 drop in here, and I can have one going, although it's pretty annoying. So I got to figure something else better. I'll have another spot for it soon. It's just for now, this is kind of where I got it for the one I have at home.
Yeah, man. I'm sure if it's not in your house or in your shop, at least your wife doesn't think you're too crazy then. She still thinks I'm crazy, but at least it's not in the house anyway.
No, she definitely thinks I'm crazy. So there's no way. I was trying to like angle to get it like in the attic, or I had all these other places I was going to put it, and she's like, nah. She's like, it's not going in the main house. I was like, all right.
Funny. Well, we might as well get started here. So for everyone in the room, welcome to our Friday afternoon club chat where we hang out and talk about mining. We are pleased and happy to have Max today from Ankova Energy. He's kind enough to spend some time with us, share some knowledge about mining on stranded natural gas assets in the oil field as well. So Max, welcome. Thanks for agreeing to do this, and thanks for hanging out with the clubs here, sharing some knowledge with us. Why don't you get us started off? Just give us your 2-minute quick overview of kind of your company, the history of Ankova, and then how you got into Bitcoin mining and why Bitcoin now.
Yeah, for sure. And thank you for having me on. These are great. I've been on a couple or listened to a bunch and chimed in on a few, and it's been a great deal that you have going on. And it's hard to have that consistency as somebody who tries to put out content. It is it's a grind, so I got to give you props. You've been getting it out kind of right on time every week, and I think it's a great thing. So real quick on my background. So I started in the energy industry about 11 years ago, and by the energy industry, primarily natural gas, oil, and natural gas liquids. When I started out my career, I worked at Chesapeake Energy, and at the time we were the largest driller of natural gas wells in the U.S. I think we were running like 170 some odd rigs at the time. And my job, really my whole career, has always been kind of at this intersection between energy and value, so energy and money, and really the infrastructure involved needed to convert energy into value, which is as you can imagine, why when I first learned about Bitcoin, it kind of immediately clicked and was something that I couldn't really shake in terms of thinking about it. And now our company's been working on it pretty hard for the last year or so. And so I was early in my career. That's kind of what I did. So, and by the intersection of energy and value, I really mean like just building the infrastructure. So pipelines, processing plants. My job was really to coordinate and negotiate all of those types of deals. Went from Chesapeake to follow the ex-CEO over to his new company, and then went from there and started Ancova back in 2014. Primarily early on, we were really an advisory firm working with a lot of small and mid-sized energy producers and helping them maximize the value of their operations. And so whether that be negotiate their infrastructure contracts, we did a lot of partnerships and JVs for different groups, but we effectively carved out this niche of just helping people get paid more for their energy. Ancova Energy was the first company that was the advisory business. Then Ancova Energy Marketing was a physical energy marketing business. So we buy and sell natural gas primarily. We also do oil and a little bit of NGLs. But that business, we really just saw like a lack of transparency. And I won't get into where we saw the model was we saw a lot of the traditional guys just didn't have a lot of transparency. And we felt like we could bring value to small and mid-sized guys. And so today in that business, we probably, I don't know what the total gas that we move is, but we market across a number of different basins, the Mid-Continent, South Texas, the Permian, the Haynesville, a little bit, not a ton up in the Northeast, but those are kind of some of the main basins that we're in. And then in 2018, we raised a $200 million commitment to go and build infrastructure, and we're focused mainly on midstream and pipelines. And I don't know if it was like good or bad timing, but effectively the market just got really challenging in 19, and then obviously in 20, COVID hit. We built out some gathering systems in Oklahoma, and then exited those investments kind of going into 20. And then when COVID hit, it was just a lot of soul searching, and that's like when we found really Bitcoin mining. It's kind of the end of 2020, and we're just looking at a lot of alternative energy infrastructure investments. And so our team, brag on them for a minute. We've got just this awesome team. The total company has currently about 18 people at the company. And we don't currently have any, it's just owned by myself and my partner. We don't have any investors or anything like that at this point. And on our team, we've got like our COO, Jason Fournier, who's built probably $2 billion worth of energy infrastructure in his career. Our CFO and finance guy, Danny Craig, has done a ton. He's probably done over $2 billion on the buy side for energy infrastructure with his old companies that he's been at. And then my partner, Mark Edge, he was back at Chesapeake for 15 years. And gosh, we tried to tally it up the other day. I think him and I together have been a part of around $45 billion worth of either upstream, midstream, or some kind of downstream energy infrastructure investment. And so have spent our whole careers in this space, and that's how we, so we had that mindset, and then we got into Bitcoin mining just by miners coming to us and looking for gas, and because we move so much gas, that's how we got introduced originally to the space.
Absolutely, man. So yeah, we're seeing more and more stories like yourself where it's energy guys, it's oil and gas guys who have been in the built out significant infrastructure and know about what actually produces value in terms of those energy assets, and then all of a sudden they're realizing that there's no such thing as a stranded asset anymore. There's no energy you can bring with Bitcoin mining. You can just bring the market right to the molecule, right? So in that regard, like as an energy first company, do you see yourself as an energy infrastructure company or a Bitcoin miner now that obviously Bitcoin mining is hot in 2020 and 2021, or do you, and in that regard, do you think that it's easier for an energy company to become a Bitcoin miner or a Bitcoin miner to become an energy company?
So the two questions are kind of like where we see ourselves fit in, and then do we think it's easier to switch from one to the other? So I'll answer the first one. We definitely see ourselves working in the Bitcoin mining space. So we launched Ancova Digital, which is the Bitcoin-focused platform, probably a couple months ago. We've got 7 guys that are full-time in that platform working. And, we are doing our own mining. It's small scale at this point. We're trying to look at ways to scale that up, but we're also looking at the services side as well. And I think that our angle is really, working with and focusing on energy producers, because we feel like in the future, energy producers as well as midstream companies will probably be some of the major players in the space. And you look at around, and in the U.S., you've got all of these very, very technical, technical employees, people used to taking a lot of risk in the energy space, guys used to spending a ton of capital with a highly risky and volatile commodity, and that's kind of their background and skill set. And so I think that as I've seen North American oil and gas producers starting to understand Bitcoin and starting to learn about it, the level of interest is just sky high right now. And so we've really kind of focused on, it's really just kind of an extension of our existing business, right? Like, we work with energy producers today to help them maximize the value of their product. I mean, this is really no different. And we work with energy producers today to help them build infrastructure to get their product to market. I think the difference is like what you said, now we can bring that market to the production. And so that's just this completely revolutionary thing. And we can talk more about all the ways I think Bitcoin is going to change the energy industry here later, because I think there's so many ripple effects from it. But I think what we're doing now is just really an extension of our existing business, which is just helping people that produce energy maximize the value of that. And so, what we've done is we've got this platform. Primarily, we started out just originally doing some gas supply for miners that wanted to go out and find gas for their mining operations. And then now we are looking at expanding those services. So things like helping people just turnkey on projects, running the economics for them, helping them through the supply chain. We'd really like to start helping with supply chain on ASICs. That's one thing that we've been working on. I mean, we're looking at that market, and we see that a lot of markups kind of in these middle markets. And so we feel like for our clients and people that come to us that want to, get help with mining, we can help reduce those costs pretty dramatically, probably 30 to 40% over what you're seeing kind of through these retail middlemen. And so that's one area where we think that we can help people, getting the data centers. We're not building them today. We've partnered with some really good people in the space who people here probably know, but we work through some of the existing companies that have them. But then we also have guys that want to try to build their own. And so helping them through that aspect of it. And then the other thing that I think is unique is that we are looking at, partnership structures. And that's been all the mines that we have going that are either in progress or that are going today is projects where we're partnering with the energy producer. And so the big rub that we saw was that all these miners wanted to come and get gas for very cheap. And it's hard, as a miner, you want to get the cheapest, energy source, but they didn't really want to share in, or there weren't a lot of good structures to where the person who owned the energy felt like they were getting the full upside of the Bitcoin. And so we've tried to focus hard on, are there partnership structures that you can do with an energy producer that can help them see the value, understand Bitcoin, and then realize it. And so that's all the deals we've done have been kind of JV type deals. And that's kind of a hangover from the midstream stuff. That's always the way we like to do it with other infrastructure as well. And so to your question around, so that's what we're doing today. And so the question around, is it easier to learn, oil and gas or the energy side, or is it easier to learn Bitcoin? I think that Bitcoin's got has its own challenges. It's difficult to, look, does anybody fully understand every aspect of Bitcoin? The rabbit hole is so deep. So there's tons to learn. I don't want to make it sound like it's simple, but I will also say that the rabbit hole for energy is very deep as well, right? Like, even somebody who could work in the industry their whole life doesn't fully understand the entire stack. It's just so complex to get, an electron generated into a podcast studio like it is now, all the way tracing it back to the energy source. It's so vast, and there's so many hundreds of trillions of dollars that have been spent to build out the modern energy infrastructure. So I think they're both complicated. I think that these skill sets are complementary. I really think the oil and gas industry is very much poised to play a big role in the Bitcoin mining space, primarily just because, like what I mentioned earlier, you've got a lot of technical, risk-taking people that understand this idea of spending tons of capital into a project that is highly volatile, commodity-based type project. So I just think that the mindsets are very much aligned to go into Bitcoin mining.
Yeah, absolutely, man. It's a fascinating time in terms of transitioning into the information age, the digital age, and now Bitcoin miners are like the digital wildcatters of the early 1900s and late 1800s who opened up the energy infrastructure for North America. It's like now these risk-taking entrepreneurs are opening up the digital pipeline to transport that energy to market, no matter so you don't need a pipeline anymore. So it's truly fascinating to me as well. And I like what you said there about the rabbit hole, and I totally agree. I'm fairly new to the whole game too, but I haven't slept much since March 2020 when I went down the rabbit hole, and especially when you go down the mining rabbit hole, it's pretty much endless. So
Yeah.
totally agree with you there. And um, just as an aside here, just for everyone in the room, I'll come out on stage as well, but just for everyone in the room, we do have Max here from Ankova Energy. He's chatting about his company here today, sharing knowledge with the pleb. We're going to go through a few questions with him. You mentioned that we'll get everyone else up on stage and they can ask questions and discuss and contribute. So Max, you mentioned a few things there that I definitely like to pull some threads on. But first of all, you mentioned like, yeah, the JV structure is definitely a pain point in terms of the owners of the energy assets are now starting to recognize that Bitcoin is extremely profitable right now in terms of mining. If you're getting like 7, 8, 9, 10x more for your gas if you're mining off it compared to where if you're just selling it to market, right? So in terms of just buying like a flat rate dollar per MCF contract and mining off it, you're kind of intimating that guys aren't necessarily so happy about that anymore. So what kind of JV rev share things are you kind of putting together in that regard?
Yeah, I mean, so to touch on what you just said, I mean, like the thing is, and we kind of recognized this early on because we were talking to Bitcoin miners, and they were coming to us and saying, "Hey, look, we want to procure energy." And when we realized this, arbitrage in the value versus what even sales gas, but especially wasted or flared gas, and we kind of told some miners early on, it's like, look, the biggest kind of cardinal sin in the midstream world is if a producer ever finds out that the infrastructure guy is making more money off of his energy than he's making, that is like a good way to just, I mean, these producers, these oil and gas guys, if they found out midstream companies are making 10x or 7x times what they're making off of their own product, that would be a very negative thing. And many producers, just from the traditional world, if you found out, hey, I'm going to go do this midstream deal because this is how I got to move my product, and you found out they were making that much more money than you, a lot of guys just won't do it out of principle. There's no, I'm never going to do that. I'm not going to give you my product. I'm not going to give you my energy if you're making 7 times what I can make off of my energy. And so you're seeing it in the mining space. I mean, there'll be guys that would rather just flare their gas than you make $35 and then make, they may make 50 cents or something, right? And so we just intuited.
Which is crazy, sorry, but it's crazy because they're literally, in a lot of cases, paying to flare that gas that can't get to market. But they, just out of like, you say principle, they don't want to see someone else come and make a bunch of money off that. It's like, my gas, I'm just going to burn it.
Well, these guys are risk takers. They're wildcats, right? Like you said earlier. I mean, this is what they do. They're used to spending huge amounts of money and rolling the dice, and so I think that's why I think the JV structure is so appealing. Is because I think that it resonates with producers. And I probably won't go into like the specifics of the different types of structures because it can be really complicated. You can do a lot of different interesting things, and we've done a lot of it in the traditional energy stuff, and so we kind of have a playbook of different ways to structure deals. But I think if you can try to achieve alignment, that to me, and teach them about Bitcoin and help them understand the upside here and how this is going to work. And I think that guys are willing to do things more so than this kind of asymmetric outcome.
Yeah, I like to add something. I have also heard of many times, a handful of times where a miner came to a site and started making a lot more money than the site owner originally thought, and a lot of issues have arisen because of that. So, yeah, that's 100% true, man.
Well, I mean, I think it just goes back to partnerships in general. And so whether it's a Bitcoin mining deal or whether it's a partnership with, whatever, it doesn't matter. It could be any type of partnerships. I had a mentor one time tell me that the way that partnerships go bad is when one person in the partnership is making a lot more money than the other person, or vice versa. One person's losing money for some reason. And really what that is just misalignment. So if you have a partnership that's misaligned where you have one group that's making way more economic value than another group, and don't get me wrong, Bitcoin miners are taking a ton of risk. You're spending a bunch of capital, Bitcoin, the hash price is volatile. I mean, there's all these different things. I'm not saying it's risk free. And, a Bitcoin miner may argue, look, put the appropriate discount rate on this and show the risk involved with what I'm doing. And I'm actually not making that as much as you think. And that's a good argument. But I think in partnerships in general, if you can be aligned, I just think it works better. And it's just an easier thing to continue to do.
Yeah, absolutely, man. It's kind of like we're past that inflection point where it's not, we don't have to hide the fact we're mining Bitcoin anymore. And so then if you want to build long-term partnerships in terms of actually accessing that energy, it's got to be a win-win too. So totally get you there. So you said you guys are self-mining. You got a few containers out there on some sites now. Like, how's that going? What kind of rigs you running? What kind of Jennies are you running? What's your data center setup look like? How many petahash you got deployed? You're looking obviously to scale up, but everyone is, I'm sure.
So we're really, really early. So we've done a couple of broker deals that were like the biggest deal that we've been a part of that getting it set was about a 1.5 megawatt deal. It wasn't actually our mine, but we had a vested interest in getting it done, and it was with one of our clients, and that was the first kind of launch deal. Since then, we have spent the money and deployed on a small pilot 50 kilowatt deployment, but we're using new generation miners. So Watts miner, 102 terahash, M30S plus miners is what we're using for that one. And so that has been kind of the first. And then we are under contract to do what could be up to a 500 kilowatt deployment, but we'll probably start with 350-ish, maybe a little less, maybe two kind of 180 boxes. But so still really early. We've got like a number of units kind of plugged in that are not actually in the oil field that we're doing in the interim to just to make some revenue on while we get that larger deployment done. The issue that we have right now is that we are self-funding everything and we're buying new generation machines. And so, what may seem like a small deployment, like 50 kilowatts, is actually a meaningful, very, very meaningful amount of money. And then for example, the 500 kilowatt one is for people to self-fund that type of thing. It's a huge amount of money. And so it doesn't sound like big numbers from the power side, but we have a ton of skin in the game. And I think the next step, and this is what we're working on really hard right now, is lining up financing, because we have this huge deal pipeline of new opportunities where we can place these units. We've got a couple other LOIs that if we sign them, it's going to need like really, really big dollars. And so the way that we've done it in other businesses is kind of gain the subject matter expertise, do it yourself and self-fund it, do project financing where you kind of maybe get some equity in directly into some projects, and then go and maybe try to do it in a really big way. And so right now where we're at is kind of the project financing. We've self-funded it and we've learned the subject matter expertise. And so we're trying to then, ramp it up here, hopefully in kind of Q1 of next year. And so that's kind of the sequencing. In terms of like data centers and power gen, I mean, there's just so many, we've got a bunch of different things up in the air. So looking at a lot of stuff. I mean, I think early on we are buying these for this first deployment, the 50, we bought that power gen. For this 500, we're looking at potentially renting, but we're also looking at buying there as well. I mean, one thing we'd like to do is get smart on kind of refurbing old gen sets. So we've got the ability to source natural gas engines. We've got some really good supplier connections where we can get access to very, very cheap used natural gas engines. And then we've got a couple groups we feel like they can help us get those refurbished. And we feel that going that route is probably going to help us cut the cost on the power gen by at least half, maybe more in terms of the cost. And so that's one thing that we are hoping to be at. We're hoping to be at long term. I think in the short term, it may just make sense to get something out there and rent it, but we're just very conscious around cost. I mean, that's our whole thing is just, we understand kind of the history of where hash price has been. And it's like our biggest focus right now is just getting to that kind of ruthless, as skinny as we can get on the OpEx side. And so we feel like using, flared or wasted gas, doing some type of structure where you're either partnering and either not having to pay for the gas, or you're get it very, very cheap, and then finding a way to drive down your power generation costs to kind of get, really our target is, at or below 3 cents. We really like to be below 2 cents, which some people may say is, not possible. But I think this gets to a whole other conversation, which I'd love to go into later, which is what is actually rolled into that number. Because I think a lot of people, a lot of groups that you see that flash like 2 or 3 cent numbers, I think it's actually much, much higher, but it depends on what they roll into it. So that's been kind of the strategy of like how to grow the company. And again, like We've got a lot of experience doing, traditional energy stuff, but I don't want to inflate what we're doing today. It's still pretty small scale relatively. Uh-oh. Looks like the space has ended. We'll see if we can get back on. So we got some technical difficulties. Let's see if we can get this back on. I guess I could edit this part out later. Well, if anyone's watching the live feed, I don't know if anybody is, but the space has ended, and we're going to try to get it back going here in a second. Oh, he's rebooting it. All right, we're back. I'm back in. All right. Okay, I'm back. Can you guys hear me?
So brutal, man.
Yeah.
Spaces.
Hold on. Is that coming through my... Can you guys hear me all right?
I invited you to co-host, Max, if you can get on again.
Just so you're aware, guys, that was my fault. 100%. I think I fat-fingered the button there by mistake. Sorry.
No worries. Was I able to... Were you guys able to hear me?
Jack left. He's not going to be able to do anything either, so it's like...
Can you hear me?
Man, I love these Bitcoin mining talks so much. Thank you for having another one of these.
I'm trying to get Max up here.
All right, can you guys hear me?
Co-host invite if you get it, Max. You might have to leave and come back in. It's crazy.
Good. How are you?
Okay, can you hear me now?
Clubhouse is so much better. Never crashes.
Uh-oh. Don't say that on Twitter. You might get booted.
Yeah.
All right, can you hear me now?
No, I'm in Spain now. I've been visiting a couple of sites over here in Spain. One was being run on pig crap, and the other one has been running on solar. So one was highly one was really dirty. The other one was very clean. Very fun.
But both extremely renewable. That's cool. Max, sorry, man. The flipping spaces is so buggy. So
Yeah.
well, I don't know where we lost you there, but I mean, where do you want to pick up again? We'll try and get this thing going again.
Yeah, I mean, I was just saying that where we're at today is still relatively fledgling in terms of our what we own. But I was saying that we're self-funding everything, and so for us, it's really meaningful in terms of the amount of hash that we've purchased and that we're trying to get going. So what we'd like to do is to get some project financing, which we're working on, and then kind of go full send next year, Q1. We've got a bunch of opportunities that would require just a ton of capital, but that's what we've been working on, and it's really just making sure that we can get just the most ruthlessly cheap energy possible, and just leveraging our skill sets in the natural gas side. And we're focusing a little bit more on grid, although we're just being cognizant of the fact that you don't want to, like, if you're a hammer, everything looks like a nail, right? So we've mainly been focused on nat gas, but we're actually seeing a lot of opportunities on the grid. Oklahoma got cheaper energy than Texas. I know the Texas people will say that's not true, and really its demand response helps out, and there's some unique things about the grid in Texas that make it advantageous. But Oklahoma typically is in the top 3 of cheapest energy states. In fact, for a very long time, we were the number 1 cheapest energy state. So I think just in our backyard, I mean, I'm hearing of hundreds of megawatts getting brought online all around me in my state. So it's kind of crazy. So we need to get smarter on the grid, but primarily our focus has been executing off grid and then working on the capital side here, hopefully Q1 of next year.
Yeah, right on. Like you said, just for everyone in the room, our last phase crashed, so this is a reboot. Hopefully, now that Jack's left Twitter, who knows? It might get better or worse, who knows? But we'll try and keep this going here for as long as we can. But Max with Ankova here is sharing knowledge, so we're pleased to have him up here. Yeah, Max, like you said, it's crazy, man. Now that miners, new gen, are like 100, 110, 120 bucks a terahash. Even to put out like half a megawatt deployment is pretty insane right now. So us little plebs are competing against the big pubcos who can raise zero cost of capital and order thousands of miners at a time. So it's definitely challenging right now in that regard. But that's pretty interesting. Like Oklahoma kind of flies under the radar. Everyone talks about Texas and Wyoming, but like even what's your grid power cost if you want to set up in an industrial warehouse there? And then what are you guys looking at in terms of levelized cost of energy on a natural gas site? Like, 'cause I saw you bragging yesterday, like your sub 1 cent cost of power.
Yeah, it was kind of a meme. It really was. I mean, the thing about that is that, this is what I want to talk about, which is this kind of what do we really consider that rolls into that cents per kilowatt hour, right? Because I see these things like, I won't call out any names, but you see like a public company or something or a big mining operation and they're flashing these really low cents per kilowatt hour. And I like made that meme yesterday where I was saying we've got 1 cent or whatever, but it's like, what are you putting into that, right? If I'm just putting my fuel cost and the cost for me to buy the power generation amortized over some useful life period with the salvage value at the end, then yes, like it looks really, really cheap. It looks like 1 cent or less than 2 cents. But you add in overhead, you add in maintenance costs, you add in insurance, you add in, you name it, right? It depends on what you want. If you have to do any site work, like on one of our sites, we're going to have to do site prep. It's going to cost 20 grand. So, okay, you want to roll that into your cents per kilowatt hour. So I think that it's very much an accounting term. And I think that people view it as a cash on cash. Now, month to month, if we're not having any big maintenance events, and if and if our operations stuff, which most of our ops people are going to be kind of sweat for equity guys right now. I mean, this is a startup, so it's going to be pretty low. I mean, it's going to be, very cheap natural gas. I can't say the exact terms, but extremely, extremely cheap, borderline free gas. And then you've got power gen that you are either refurbing or buying. And then that, if you're paying for that capital up front, then it just becomes like an accounting question. Like, if you can either capitalize that cost. And so if you capitalize it, your month to month OPEX is really just your fuel and or any labor or maintenance. And so if the fuel is effectively free, it's very, very cheap energy. But it gets back to this question around, I feel like a lot of the press releases and the things that you see, the things that people talk about, they're just not fully burdening that kind of cents per kilowatt hour. But I'd love to get other people's take on that point.
Yeah, for sure. And there was a good podcast on with Nick Carter a couple days ago, and it was exactly about that. Like, what's the accounting is pretty nice, shall we say? And then a lot of guys aren't even considering the machine, the miner depreciation in their overall cost as well. So yeah, it can definitely make it look good on paper. But what are you seeing in terms of nat gas sites compared to Oklahoma grid energy in a warehouse, say? Is it still far superior to run a generator and deploy on a site, on a stranded site, or just plug into the grid right now?
I mean, it's just complicated. Like, so at a scaled level, I think there's just a lot of factors. So if you're trying to go for a larger scale, and by larger scale, I'll say 10 megawatt plus, so tens of megawatts, then doing that off grid is very challenging, and you're basically building power plants at that point. So if you're on, so it's obviously easier to just do kind of a vanilla on grid deployment if you're trying to do a bigger scale. But then there's a lot of other things you got to factor in. Like, right, we saw a site that was like a 100 megawatt site, and it's got super cheap, call it sub 4 cents power, but it's in like a highly residential area, and there's no infrastructure. and you're like, okay, that's cool. I can, and everything's so competitive right now. So it's like you find these sites, and then someone's like, it's like, oh, there's all these people chasing this, and you got to sign up a whatever, however many year lease, or you got to buy the site. You're locking yourself into potentially multiple years, 5 years plus of this demand charges, or getting into this site. And then you got to build structure. You got to build a data center. You've got to then insulate for sound. I mean, there's just so many factors. You got to get the transformers. You got to get all this stuff set up. And so when you factor all that in, like, yes, the power cost on grid can be 3.3 cents, or pick a number, right? That's what you're actually buying it for. Maybe with taxes, it's a little higher if you factor in some of the tax things that you have to pay. But there's just so many other aspects to it. And then it's like speed to deploy, right? Like, so if you can go do a bunch of these mobile data centers on either sales gas or wasted gas, and you can, like, if I had an LOI signed and I had a site prepared for waste gas, I mean, you can get it up and going. Like, especially if you're building your own data centers, I mean, it could be weeks to deploy, depending on how fast you get the ASICs. So let's just say 2 months being conservative, 2 to 3 months being conservative on getting, potentially multiple megawatts spooled up off grid. If you're on grid and you're in some area, you may have to build a data center. You may have to get transformers. You may have to do things to worry about the sound. So, for example, that example I gave where it was a residential around, I mean, a lot of concerns with that, right? And so I just think that, like, that power number is deceiving, and I'm not sure how many. It's more challenging. You have to have a long-term mindset, I feel like, to be on these larger on-grid projects. And in Bitcoin, especially if you're working with people that are coming from China that want to do things here, very short-term mindsets. People have been through bear markets. People have been through bad times. And so, the ability for someone to want to commit to a project for 5 years, and you can't even tell what's going to happen to Bitcoin tomorrow in terms of price or hash price 6 months from now, I guess it's a long-winded way of saying there's so many challenges on grid, which is why we are gravitating towards these off-grid sites, because we know how to do gas contracts. I can lock in for 10 years. I can get covenants running with the land. I can make it my option to be able to take the gas. So the reverse of a demand charge. I can basically say I have the right but not the obligation to take your product. And so we know every trick really in the book on the gas side. So again, that's kind of in terms of contracts and how to structure these deals. And so that's why we're gravitating towards that. There's just a lot of flexibility, a lot of speed to market. And although it doesn't have that kind of flashy 100 megawatt, tens of megawatt numbers that you see, it's still meaningful capital. I mean, you're still talking about tens of millions of dollars of capital. It's not like this is small projects. And so that's why we've gravitated towards it. I think that, we need to get smarter, and I'm not ruling out us doing something on grid in the future. I just think today we're kind of sticking with what we know and trying to learn all the different nuances and complexities of doing these larger on grid projects.
Hey, Max, if I can ask a question in regards to that. Certainly, with the self-invested self-interest, it's easy to appreciate those long-term perspectives. It's easy to justify reinvesting into the mining operations, things of that nature. Certainly in 2018 and 2019, we did our best acquisitions for mining operations with investors that had cold feet, essentially. These people had lost interest. They tried and it didn't work, and so they were going to take their money elsewhere. As well, when we front-run the industry in 2017, a lot of the people that were buying the ASICs did so as a physical hedge against the technology itself. Having a physical asset they could depreciate and insure was more able to be understood by these traditional funds. So when you're now taking on investors, how are you finding investors that specifically meet those 5-year requirements, have those good perspectives, or are you simply just doing terms and conditions to protect yourself from those risks?
Well, that's the big question, is like, how do you find those investors that fit that slot? And so that's like, maybe you missed, I don't know if you were at the beginning, but I said that's kind of, we're in the discovery phase for capital right now. And so everything we're doing is relatively small scale in terms of like what you see, but it's self-funded. So it's like it's large scale for us, right? Like a 500 kilowatt deployment with new gen is like, that's massive scale for people that are companies that are self-funding it, who aren't, ultra high net worth people. So I think that we're doing some discovery around capital. And what we're finding is that for these larger on-grid projects, you're seeing a lot of people that have connections in China, and you're hearing from a lot of people that want hosting, and you're seeing that there's opportunities to bring either someone else's miners in and do hosting, or bring someone else in that wants to have that site. But then when we're hearing about those opportunities, it seems like they are not wanting to commit to what needs to be committed to build out the scale that you would need. Right. So it's like if you're doing a 100 megawatt site, like that's a ton of capital in CapEx to just go in to get the facility to the data center how you need it, let alone the risk on the ASICs and the hash price and all these other things. And so I don't today have a good large scale a bunch of institutional investors like we did in oil and gas. Like when we went and raised $200 million for pipeline infrastructure, it was easy. Like we knew the groups that did it. They've been doing it for decades. They understood the risks. They understood the challenges. And they bet on the team. They looked and said, you guys have the experience. On Bitcoin, it's like, it just still seems very, very early in terms of the capital space. And then in terms of the total hash power out there, it's still very Chinese influenced, right? And so I don't have the answer on who the best capital is. I think that in the future, probably the near-term future, we're going to see some major private equity funds raised to focus specifically on this. I know there's some that are doing it, but I think there's going to be more. So for example, like in oil and gas, there are like $5, $7, $8 billion funds that have been raised to build infrastructure. And so a team that has a good idea, before this bad kind of coronavirus and this last 5 years has been difficult in that space. But prior to that, like if you're a good team, you had a good idea, you can go out and raise a couple $100 million and go get after it. And like that feeling of being able to easily go get that capital just isn't there in the Bitcoin space today.
And I don't know, this certainly hasn't been always our experiences, but the best partners, investors we've had have come to the table with long-term perspectives. I would almost go as far as calling them angel investors.
Right.
And very often there's very little terms and conditions put on paper. The capital is upfronted. A lot of time they just take over those orders for us. And there's almost no follow-up. Any individuals where they were very concerned about the monthly returns, the power rates, the infrastructure cost up front, outside of just being logistical and being litigious, all those relationships broke apart. Those people had the wrong perspective. So for ourselves, the best investor looks like someone who has 5 to 10 year perspectives on Bitcoin specifically, not even on mining in general.
Yeah, I love that. Yeah, see, someone who gets it, basically, right? Like that's essentially what we're saying, and that's like what we would love to find in. And what we found is that the oil and gas guys don't get, or the traditional energy guys don't get Bitcoin, and then a lot of the people we were talking to, for example, like the VC world, like that's just not the right world. Those guys want to put, they want to do $31 million investments into some team or some software or some crypto that's going to get them potentially the next unicorn. Those guys are terrified of high CapEx, high capital industries. And so they're not the right guys. And so you almost need somebody who is a legacy infrastructure investor mindset who understands spending just vast amounts of money and having a long-term view. And you need that person to then understand Bitcoin. And we've just, at least we're relatively early in the space. We just haven't found a bunch of groups that check those boxes. We're starting to discover more, but that I think is exactly what you said.
Yeah, it's an education and bridging the education gap between the waste and the last resort buying and all of those benefits to those industries. But that's literally its own job in acquisition, its own self, just to educate these people, right?
Yeah.
And you're in the right wheelhouse there, Max. Like in the oil and gas industry, you got guys who are typically used to spending hundreds of millions of dollars on CapEx to build out an energy asset, right? So you're definitely you're in the right place, man. Like those are the guys. Like I think the owners of the energy asset and those guys who are used to doing that once, and they are learning about Bitcoin mining, right? They're going to be willing to put it out. So yeah, you're definitely on the right track there. So hey, everyone in the room, welcome Friday afternoon, Hashers United Club Chat. We have Max here with Ankova. Awesome to have everyone. Anyone want to come up, ask a question, discuss, just request, we'll bring you up. Dr. Jeff, welcome. I'm a little disappointed that you sold all your Bitcoin. We had a flash crash here down to 51.5. So I don't know what you did there, but can you please start buying again?
Yeah, man, that was me. I was 100x leveraged, and so yeah, I got wiped out today. But I'll grind it out. I'll be back next week, hopefully. Just kidding, everybody. If you guys don't know me, that's not true. I don't use leverage, and you shouldn't either.
Do you have a mining question for Max or anyone else here?
Wait. Did you just tell miners not to use leverage? Because I'm pretty sure I'm taking all the fiat debt I can at this point.
There are shrewd ways to do it, but for the for the common folks, please don't use leverage. For those who are as smart as Alex and other financiers, go for it. But please know what you're doing and make sure you have the cash flows to cover it so you don't get wiped out like everybody did today.
Yeah, that's good. Jeff, do you have do you even mine yet, or how are you going? You got any S9s running in your basement, or is your wife not letting you do that yet?
Yeah, not yet, man. I'm still just here to learn with you guys. I wanna like, I think I said this to you like 6 months ago. I want to be a CFO for a small mining company, and I'm good at finance, but I don't have any idea what you guys do to make profits in the short, mid, or long term. So, but I fully support miners. Miners are my favorite groups of people. I want to invest in miners. Max, you were talking about how hard it is to raise capital when you're on the smaller side of things. That's my big concern, is that these huge miners that can access the capital markets for basically 0% interest, that they're just going to grow so huge so fast that's going to be hard for anybody else to catch up to them. And so my fund, personally, what I want to get to the point is, in a few years from now, I want to be making long-term private investments in smaller miners, kind of off grid. So, but that's for another day.
Yeah.
They're going to place very high barriers of entry here in the U.S. as well. These large corporations, they're going to make it very difficult, like the BitPay license in New York. You're going to find that as these corporations get larger, they're going to make it far more difficult for the smaller cats too.
Right, they're gonna make the regulation around them, not unlike what huge investment banks are doing too. So they seem onerous to the big investment banks, but they have the capital to be able to stomach that and to deal with the regulatory needs and to have all the attorneys and all that stuff. But it basically prices the little guy out, and so I'm very concerned that that's going to happen with Bitcoin miners as well. So I'm all about supporting the organic growth from the smaller miners.
Yeah.
Hey, Max did it right. Yeah. Max grew out of self-invested. Now he's taking on investors, right? I think that will always exist in the space regardless of the barriers.
Yeah, no, for sure. What I was going to say is that, like, we're trying to, and we've done it with other stuff, like we've always felt that if you can put your skin in the game and show that you're vested and that you're in it, then that's a good way to raise money, right? It's always harder to raise money. It's always easy to raise money if you have subject matter expertise and if you have a bunch of skin in the game. We found that that's easier, but Jeff, to your point, I mean, that's something that we're worried about, and that's why we're very focused on just getting the most ruthlessly cheap cost of energy that we can, because we've seen this play out like in oil and gas. So during the shale boom or the shale revolution, I don't know if everybody knows here, but like back, a couple decades ago, we really believed and thought, and like all the smartest guys in the room thought, that there was just no natural gas. Natural gas was on the decline in the U.S. and that there was never going to be any more new discoveries, and that we could never produce a lot more of it. And then we had kind of this, revolutionary technology of horizontal drilling coupled with hydraulic fracturing, and that just unlocked this massive amount of very cheap, very abundant natural gas energy. And then what we saw like a gold rush, because gas prices went up. At the time, gas prices were much higher. Natural gas prices were much higher than they are even today. And you saw this just massive influx of capital, similar to kind of what we're starting to see in Bitcoin. I don't think that we're quite there yet in terms of just the amount of capital coming in. But what happens was you got a lot of distortions. You had a bunch of companies that were publicly traded. They were able to access a lot of really cheap debt. And then whenever the price crashed because too much supply came on, so for example, like if the hash price were to crash because too much computing power came on, and maybe I'm being too bullish on the price of too bearish on the price of Bitcoin, or maybe there's like supply chain constraints that will stop this from happening as dramatically because of just ASIC production. But if it were to happen like it did in natural gas, we went through like a lost couple decades basically, where guys were just producing, essentially, maybe not necessarily at a loss, but they were effectively like right at break even or at a loss, and they were doing it to pay their coupon payments. They were able to issue more equity. They were basically able to just keep this machine going, even though like no like private or independent person like myself who's spending their own money would ever invest in these projects because you couldn't make a return. But the big public guys just kept drilling because they had access to this capital. And so it just created this huge distortion. And so that's what we worry about in the mining space, is that we could get to this point to where the access to capital, whether it be through cheap debt, low interest rates, or whether it be through the public equity markets, that could just drive the hash price to where it is effectively unprofitable to mine. And guys just keep mining at a loss because they can keep, the hamster wheel going effectively. And so that's a big worry for us, because we've seen it play out in and we lost decades where you just couldn't make money. And so it's just a thought. But maybe again, I'm being too bearish on the price of Bitcoin. You know, if we're at $1 million a coin, then that's going to matter probably in the near term. But
It's a difficult play, right?
Phil's been waiting forever down there, guys. Let's give him a chance to chime in there. Phil, we don't really raise our hands here because we're just.
Hey, right on. Thanks for opening up. It's a perfect discussion here. I appreciate you, Sovereign, for bringing Max on, and this is something that I'm interested in. I like the term here, wildcat miners, you know, and I'm in Canada, in Western Canada, where that was, you know, it was a big thing years ago, and now with Bitcoin, this is it. So I guess one of the questions I had for either for you, Sovereign, or Max, is the, you know, when I've connected with a producer and connected with a data center provider, and you know, and I'm thinking about, you know, how do I what's a good way to set up the framework for a contract of setting up a rig on a site, and particularly, of course, the producer is very interested in how can they get you know, flare gas, and how to you know, make use of that on a mining rig. And I'm looking at like a 50 kilowatt, and just like you know, I'm starting small. It's just self-funded, and or very, you know, my family members getting involved in bankrolling this at a really small scale project to start with. But when it comes to talking with a producer, you know, what's can you give me any idea as far as a framework and how to talk to them? I really do appreciate too what you said about you know, achieving alignment and make it profitable for both. But can you give any more examples or kind of a framework on how to approach a producer and how to get this set up?
is it flared gas or is it sales gas it's for steel? Because it kind of makes a difference.
Yeah, well, you know, and they've the field would have both. So I mean, I think, and there are a couple of stranded sites or cap wells that would need to be opened up. But you know, like, I'm brand new into this. I don't, I haven't worked in the oil and gas industry, but I mean, flare, if it is sites where they would be flaring, of course, they'd love to be able to make use of that some other way. So they're interested in that.
Yeah, I mean, I think that, like, if it's, you know, the best case for you would be to just kind of have an arm's length agreement where you're purchasing the flared gas for a cheap, you know, kind of sub $1 per MCF is a pretty good rate if you could buy it. Now, if they're not, you know, if that doesn't appeal to them, some producers may just say, look, I want to mitigate this flare because it's an ESG, you know, it's an ESG thing, and it's helpful for us because we don't have to flare, and we don't have to report that. And so for them, and they're not making any money on it today, and they have no access to a market, then that's kind of a win for them. But a lot of these producers, like we talked about at the very beginning, they're starting to realize how much, you know, how profitable mining is today. And that's kind of rubbing them the wrong way, that they're not getting any of that value. And so you can do like you could buy the gas, you could do some rev share with the mining operation. You could invite them to participate with you in the mine. You could do, you know, there's just a lot of things. And I think that's a good one, right? Like, invite them to participate, like JV. But if you're going to do that, you know, I think for you personally, you need to be focused on making sure that you're getting the cheapest possible cost of energy. And so don't sacrifice just getting the deal done and then, you know, locking yourself into something that is, really, to be honest, with all the risks involved with off grid, I really think you need to be under 4 cents, under 4.5 cents, 4.5 to 5 cents. You start to get above that off grid, and man, you're taking on a lot of execution risk to be able to do that. So first and foremost, make sure that you're going to get cheap energy, but allow them to participate on a heads up basis if you want. There's all kinds of other creative structures you could maybe incentivize them, and carries and back ends and things like that. But you know, from your perspective, just get the cheapest energy. And then in terms of like the actual contract, you know, you want to make it a gas purchase contract. Try to make that straightforward. Also try to make sure that you have some kind of dedication from them. That's one big thing I've seen miners make mistakes, is that they go and they spend a bunch of money on kit and they get it deployed, and then they don't have like a Loctite contract. And then that, you know, that producer says, hey, by the way, the pipeline showed up and we're no longer going to flare, thanks. And it's like, well, wait a second, I thought I had the rights to this gas, and you didn't actually have the rights to that gas because you didn't have it in your contract. And so There are things in midstream like covenants running with the land. You want to put a dedication that ties to the actual leases of those mineral leases, and make sure that you have the actual right to take that product. And then the last thing I'll say, just outside of contractual, is just hopefully you just trust this person or these producers, and you know who you're working with. And that's one thing that in business, we've been burned on the midstream side or on the marketing, physical gas marketing side, because a contract's really only as good as what you're willing to litigate. And if your counterparty is somebody that has deep pockets or is a big company, then it's very difficult, if not impossible, and possibly it's prohibitive, basically, to litigate that. And so no matter what your contract says, they can always up and cut you off of your energy source, and then your only recourse is to litigate. And a lot of times you can only go after damages, and that can be hard to prove. And so I just would caution you, if you have no experience at all in gas, purchase deals or anything like that, just be cautious. In our company, I mean, you could always reach out to me on a side note, send me a DM, and we could give you some high level, some pointers on that, because it is a lot to take in if it's your first time doing it.
No, I appreciate that. I guess on maybe more on a technical level, what kind of and this would be part of the contract too, probably, is do you need to have certain grade certification gas to run these generators? I guess there's a lot of factors, and again, I'm not that familiar with it, but certainly moisture content, H2S content, and that in the gas itself. But what are you looking for to feed the generators that you're mining with?
I mean, ideally, you'd want like pipeline quality gas, which is hard to come by, especially if you're out in the field and you're on a wellhead. So you're probably not going to get that. You can find some like 1,000 BTU or 950 to 1050 BTU gas that's like relatively low heating value, and you can use like a Caterpillar genset that is pretty efficient. But you can mine with liquids rich gas. The big thing is H2S. That's the one I would be really cautious about. There's other inerts as well, like CO2 and nitrogen, that could potentially be an issue. But for the most part, H2S is like the big one you really want to make sure that that's not in there, because that can be a massive cost to treat, or it may not even be feasible economically to treat it, depending on how high the ppm is.
Right. No, I appreciate that.
Maintenance is required for that type of equipment if you were using not pristine gas, for example.
Maintenance on the equipment? Is that what the question was?
Yeah, on the generators, for example.
Well, I mean, that's the thing, is that the generators need to be, the type of gas that you're using and the type of engine that you're using. Like, I mean, this can cause a lot of problems. So, and I'm not an expert, like I'm not the engineer at the company, and we could get our COO could tell you this a lot better, but you just want to make sure that you're running the generators correctly, because if you don't have the generator tooled correctly, you don't have it, the gas stream is not, the type of generator that you're using is not matching up to the type of quality of gas that you have. So for example, if you've got really rich gas, like 1400 BTU, it's got a lot of liquids in it, and you're running a generator that's better suited to run on 1000 BTU or pipeline quality gas, like it's going to cause problems. Or if you were to run even a little bit of H2S through a genset, number one, it's deadly and dangerous, but number two, it could corrode and destroy your equipment. And so, again, I'm not the engineer on this, so I don't want to get into the fine details, but you just need to make sure that's something that you focus on, and you have someone who is that subject matter expert, because effectively that's your power at the end of the day. Like, you can do everything else right, and if you don't have uptime on your generator, that is what's creating the electricity. And, for every day that you're down, that's a lot of Bitcoin that you're losing, and it pushes out the payback period on that project. So this is definitely a focus point that people need to have.
I guess what I would say is, on the low end of things, those more general generators that are able to use the large variety of type of input, from my understanding, they require a lot of that maintenance here in Alberta, in Canada here. A lot of the units have required a lot more maintenance schedule than they initially thought they would. And then I guess if you're on the clean end of things, you can really pick pristine equipment and essentially avoid a lot of that maintenance altogether. But that can certainly be built into the business model, right? Having to clean equipment and maintain equipment can certainly be still beneficial from a cost analysis.
I'm curious, what when you say quite a bit of maintenance, what is that like daily or weekly or monthly? What would typically be a maintenance schedule, say on a gasoline converted to natural gas engine?
From my understanding, they were requiring full shutdowns, which they didn't expect, and so they had to go forward with redundancy. And that was just due to the they had used general equipment and they were using dirty gas, from my understanding.
Yeah.
So it was monthly, from my understanding. They were having to change quite a lot of maintenance.
That's good to know.
You want to line up the
generators too.
That's what I was going to say. You want to line up the type of generator with the type of gas. And so if you don't have that, then you will have to do more than you think. But there's going to be, regularly scheduled maintenance every couple months. I mean, you're going to have a maintenance schedule for sure. And I think having not just the maintenance schedule, but the mechanic and the access, to the mechanic and having them out there and some redundancy built into that position is going to be a huge part of it. And that's like one of the big challenges that we're having is that like we're getting a bunch of interesting opportunities, but it's like, here's one, it's over in this state. And it's like, oh, that's a little far away. It's like you first start to look and it's like kind of where you bias towards where you are geographic, but then things will come across. You're like, oh my gosh, that's an amazing opportunity. We can get energy for basically free over there. But then you're like, but that's in this state. And man, that you got to fly and then you got to drive 3 hours to get to that site. And you're kind of like, as cheap as that energy is it going to be offset by the fact that, kit goes down? And I mean, I know stories from, I won't call out the group, but I've got some good friends that are very, very good at off-grid mining. And I've heard stories where they did like a new deployment and it was in some very rural place and their head ops guy is like having to fly out there 3 times in the span of a week, right? Like on a new deployment. And you're just like, oh my gosh, that was miserable. Like literally getting on a flight like late at night and getting out there in the middle of the night to work on it. And so
you gotta sleep out there, man.
Yeah, right. Huge consideration.
Yeah, that's what I want to do is close to home. That's right. That's right. I mean, just if it's not quite my backyard. I wish I had a well in my backyard. And the producer said, yeah, if you got a well in your own property, well, then that's, it's a little more straightforward. But close to home here, that's the idea. And that way for that maintenance and, just looking after the miners as well to make sure that they're kept clean and running. That's the idea here.
It goes to show you it's not for the faint of heart, and really like mining on off-grid stranded natural gas is really in the wheelhouse of the oil and gas companies that have been doing it for 100 years, right? Like these guys are used to being out there in -30 in the middle of winter, maintaining generators, keeping the gas flowing. That's why like if you're partnered with these guys and they're maintaining your generators, and they're out there, they know what they're doing. That has been, the best case scenario in our experience. I don't know, Max, if you have anything else to add on that.
No, that's exactly right. You just said exactly what I was thinking, which is that partnership. That's why it becomes so important because now they have a vested interest and you can access and use their field personnel. So if it's something, that goes wrong with the ASICs themselves or with like your, the modem or something that's wrong that's on the tech side, then you're probably going to have one of your people help. But if it's something that's on the physical power generation side, it's huge to have that partnership because now they have a vested interest in making sure that those operations run.
Well, they're going to be going out there anyway to inspect their side of the property, right, on the well itself and that would be part of the agreement. So if the operator for that and would have enough technical skills to look after the generator, so that would just have to be put into the agreement then, I guess.
Yeah, but look at it this way. If you're profit sharing, they have invested interest in how quickly they get out to repair that versus, maybe coming out on Monday. So it's just one of those things to consider. I've certainly found being a buyer of last resort is great, but if a better buyer comes along, they'll just kick you to the road. Having that mutual benefit, I guess, increases everyone's interest level quite a bit.
And that goes along with what Matt's saying on that, aligning that agreement. So that's great.
Guys, we've been going for about an hour here with Max from Encove Energy, Friday Pleb Chat. Happy that he's here sharing knowledge with us. I posted a bunch of tweets at the top. If you want to check them out in the nest, they're basically Telegram groups where there's tons of knowledge where all the miners hang out there if you guys are interested in learning. And my dank home hash cave setup that is definitely a work in progress. So that's pretty hilarious too. Anyone else has questions? Come up, ask Max.
Yeah, quick question, Max. Finding the trapped well gas. What is the best method of contacting companies to sell you their gas? What was your method?
Well, I mean, that's like almost like a broad question around like what's the best method of just reaching out to people in general. I mean, in general, it's best to have some kind of a warm.
sorry to interrupt, but gas companies, not people. Gas
Yeah,
companies,
gas
right?
companies, but there's a person at that company, right, that you need to reach out to, and so there's somebody that handles it. So usually, if it's a bigger company, you're going to have somebody that has my skill set that grew, that is working in a role where they are in charge of that, right? Someone who's in like a commercial gas sales rep position, or it's somebody that's in charge of their gas marketing or energy marketing. If it's a smaller company, it may just be one of the engineers. It may be a finance guy, maybe a landman. So every company has a different person at the company that handles this. It is typically pretty difficult to just kind of cold call a company and find that person. And so this is something that, because my legacy business, we work with small companies to help them get more efficient at selling their product. And so it's always like, who do we need to talk to, right? And it's like you try to find somebody that knows someone at that company or that knows about that company. They can tell you, and they're like, oh yeah, their land VP, he handles all the gas marketing. You need to reach out to that guy and you can find him. And so it's if it's a big company, they probably have a whole department doing this. But it's really just, oil and gas business is a very, it's a small business, but it's kind of a good old boy business in the sense that everybody kind of knows somebody, or, everybody kind of knows each other or knows somebody that knows the other person. And so I've had a lot. This is a common question that I get. People send me a note and they're like, hey, I want to find natural gas to mine with. Like, how do I start? Like, who do I reach out to? And it's just difficult because you just kind of need to know people in that space to be able to do it. Not to say that you can't. I mean, cold calls can work. It's just difficult.
I understand. Like, I've done some cold calls, but I'm finding with the company that I'm working for, the hardest part dealing with is actually getting not the gas company, it's the miners to commit, right? Like, I found a gas company offering 5 megawatt pocket of gas for a 5-year lease. Everything was good. And then when it came down to the miners themselves, the company, because we're building the site for them. And then when it comes down to the money and time to send the money out, they get cold feet. That's the issues that we're having with the miners.
Interesting. I've not seen, I mean, most miners, if they're out there kicking the bushes, hopefully they can execute. But yeah, I could see that scenario as well.
What's your dollar per MCF?
That we can buy gas for?
No, the other guy who said he was working with someone and the miners keep pulling out.
Oh yeah.
Well, I'm just doing the sales for like trying to find the gas. It was my partner saying that these companies not willing to fire, right? Because I just started about a month ago, and I did cold calls. It worked. I found 2 companies. One was really, really interested. And the other guys were like, we need to send a survey team down there to see how much gas we got, and we still haven't got response from them. But regarding the miners themselves, the guys in China that want to build, like, they think that they're going to get this gas for free, but they're not. Like, there's so much overhead involved with this, right?
Yeah, the Chinese mining companies are definitely more difficult to work with. The U.S.-based ones, I mean, they're usually pretty straightforward. If you have the right dollar per MCF and you have the right volume of gas, provide the gas spec, and know that it'll be somewhat consistent, then you're good to go. If we're dealing with stranded wells, being able to send them the flow test so they have a spec and what type of volume they're dealing with, and a dollar per MCF are the big things. I know a lot of miners won't touch gas like as it starts to creep above $3 an MCF. Most of them are trying to find 2.5 cents or below. A few years ago, you could get the dollar per MCF contracts, and so that's usually why the miners end up disappearing from those situations.
Especially gas prices are going up this winter, and a lot of these gas companies don't want to sell to us. They want to rather go sell for over $5-6. So at this point, this particular winter is very difficult for us.
My phone won't let me turn my mic off.
I'll mute. Can I go ahead and ask a question, guys?
Yeah.
I wanted to see if anybody could comment on what you guys are seeing as far as the ASIC prices and supply chain dynamics. What do you guys think it's gonna happen? Just because historically we've been able to see the price of ASICs kind of moving along with the price of Bitcoin, but recently that's really not been happening. So I just wanted to see what you guys are forecasting as far as the next maybe like 6 months to a year.
I expect current gen ASICs to be sold at whatever they think it's going to take
to ROI them after a year. So if Bitcoin goes to $100,000, ASICs will go to $20,000.
Yeah, I think that's actually a really good point. So this is actually a great way to find out how much money the person you're buying your ASIC is making off of you. And this, I'm just saying this, and if you look at like somebody who's a retail seller of these, and there's been more popping up, and then you calculate it like a reasonable energy cost, like what your actually a good way to look at it is like don't factor in any of your energy costs. Just say you could get energy for free, and then calculate what your payback period is. And if your payback period is like 18 months, and you're not with a zero energy cost, then this person is marking up this ASIC very, very much higher than what they're actually paying for it. And that should be a red flag. And so this is something that our company is seeing a lot of, and we've heard about it on podcasts and spaces for the last year that it's just very difficult to get ASICs reliably. So it's something we're very focused on because we're seeing groups selling ASICs and making just astronomical margins, and that's going to compress. And we're going to hopefully be a reason why that does compress, because there are getting more lines of communication to China and to these different market makers that sell these. And you really need to, especially if you're a pleb and you want to do home mining or you want to do something, it's like, I would love to be able to offer, and it's a challenge, right? There's a lot of challenge with supply chain and risk management on selling these. But I think that, once you gain some knowledge in that space, you realize that the markups are very high on a lot of these middle markets. It can be anywhere from 30, and we're seeing 50% markups on some of these. So that's just look and calculate what your payback period would be at the existing hash price from whoever you're looking at buying from. And then however higher that is from 12 months is probably a good indication of the percentage markup that they're making. And I don't know, someone correct me if you think that's a bad call, but I see a lot of markups right now.
I think that's actually to the benefit, though, of a miner more than to the detriment, because logistics are a major part of when you're purchasing this equipment, when you're putting your Bitcoin to work, hopefully at the top of a market, allowing you to, say, spend 1 Bitcoin to buy 4 machines and end up with 2, 3, 4 Bitcoins over a time period, giving you more Bitcoin. You were able to get S9s pre-December for $90 Canadian with power supplies, and now people are paying as much as $800 for those same machines. I think the logistical cycle it lends to the benefit of people who spent more time in the space, because you can buy equipment for pennies on the dollar and infrastructure. We got the fans, we got the cables, we got the ducting, everything for pennies on the dollar when these operations are not profitable during the bear markets. You can front run that equipment, and then you can remobilize and upgrade to new machines, allowing you all sorts of tax insulation as well through that purchasing process, increasing your density and efficiency, and selling off your 5-year-old equipment for literally the same price you paid for it 5 years previously. I think that's the logistics is, I think, where most operations fall apart, specifically when to offload equipment and when to upgrade equipment.
So I was actually able to purchase a lot of equipment, during the August, like the July drawdown, and I was thinking about buying more, and that's kind of when I was like, man, the price is just really crazy right now. I guess I just wanted to see what you guys are thinking about doing and recommending. Probably gonna be a good idea for me to kind of hold off and see really what happens. Like you said, it's logistics. It's the hard part, in my opinion.
If you have the proper time propositions, you could sell off your entire mining operation right now for face value at incredibly high prices, and then just wait 6 months for an order of brand new machines delivered. Like there's some ways to approach this that people miss.
Yeah, but like what you're saying, and I hear this a lot from people in the mining space, but what you're saying is like you just need to time the market. Like you just need a time when it's the lowest part you buy, and then when it's the highest part you sell. And like, I mean that, it's if I could do that with Bitcoin, then like I wouldn't even need to mine, right? It's like this idea that like I'll just buy when Bitcoin dips, and then I'll just sell when Bitcoin goes up. Like that's nobody knows how to do that, and I think that there is something to be said about like what I was talking about more is just making sure if you're about to deploy, that you're not paying a huge markup today, like that you're getting the best possible price that you can, even with, because clearly like the price is going to go up when prices are higher. I'm just saying don't try to get squeezed. If you're buying, make sure you're going through a reputable seller that you can get the best price that's available at the current time in the market. And like, let's not forget, if you're serious about mining and you want to plug in, like we're losing what, like 3.8% of all the 6.25 blocks a month. I mean, we've got what, 2.5 years to the halving. And so, if you're sitting here waiting to buy kit until the next bear market, we don't know when that's going to be, and it's hard to time that. And so, I mean, to me, it's like, I don't know. I think you focus on cheap energy and you focus on making sure you're not paying a big markup, and then you deploy and you go. And then and then the other thing is make sure you have dry powder, because to your point, if things do really fall out, it would be nice to scoop up some extra kit at that point, but we don't know when that's going to be.
Well,
Yeah,
we've been
I
able
completely
to
agree.
predict it based on block count, right? Halfway between the cycles, probably a pretty good time to be buying equipment. And a couple months after the halvenings is probably a pretty good time to be selling equipment, just if you're keeping it stupid simple.
Yeah, it's a common question all the time. I know Albie has a question about this too. Like, do you pay now and deploy now, or do you kind of wait for futures, or maybe wait for a longer or for a lower price? So Albie Giverman, tell us what you've been struggling with there.
Yeah, man, Sovereign, I appreciate you having me up. I'll just ask my question and then hop off stage so that other people can get up here and ask you guys. So I'll just preface this by saying this is from my own personal, selfish, reasons I'm asking this. So I'm trying to figure out what's better. I'm new to the mining space. I have about 1 petahash up with Compass right now, and I'm going through this whole rigmarole with them where it's just they're having a lot of issues deploying, blah blah blah. So long story short, I have an opportunity to diversify some of my hash rate that I'm trying to get online with River, and I was talking to the River sales rep, and they were just telling me okay, I'm looking to get X number of miners, and my choice right now is whether or not I want to get these 110 terahash S19J Pros up in about Q2, or I can get the 140 terahash XPs that are the new ones that are coming out at the end of towards Q4. They're the same price per miner, right? So that's a wash. But the question is is it better to wait? You lose out on 2 quarters of essentially mining. And then I don't know. There's a lot of factors here that I'm trying to juggle in my head. What if the XPs don't deliver? What if they underhash? What if blah blah blah? So I'm just curious to get your guys' pro take on it. If you were me, what would you do? I know that's a very selfish question, but maybe it helps somebody else in the audience too.
Are you hosting on everything? Is it all hosting with somebody like River or Compass?
Yeah. Yep. So I don't have the space where I live to self-host.
Yeah.
And set that up. So yeah, so I'm doing it through Compass and River. Yep.
I would just, number one, I think through Compass, and I'm not trying to bash them. I've actually bought a couple miners from them, and it was really, I got actually a decent price. The prices have gone up recently. I think it's gotten pretty marked up, but the issue with going through those types of groups is that you're typically paying more per terahash that way, and then you're waiting a long time, and there's a lot of question marks about when it's going to happen. My bias is just speed right now to deployment, and that's primarily because we're about to hit 90% of every Bitcoin ever mined, and then we're about to get to the halving here in about 2.5 years, and so if you're having to wait for some higher powered 140 terahash unit, and it what you just said is actually, you hear this a lot, right? People have a scheduled time when they're going to get it, and it just keeps getting pushed out. And that just kills you because you're having to deploy typically the capital in time 0, which is today, right? So I would my bias would be to go to whatever you think is the fastest to execute, and then just start hashing. That way you can start dollar cost averaging into today's hash price, which is still really healthy. And then hopefully get as much Bitcoin as you can before the next halving. And if you have any other option to not buy from a Compass, I don't know what River's prices are, and I just know that some of these guys they're marking it up quite a bit. There's just not a lot of options for this. That's why I said our company would really love to be able to start offering to the plebs that can mine. I don't think that we're ever going to do hosting like Compass, but in our existing commodities marketing business, we've always had a lot of transparency. And so I think our model, if we were to sell ASICs, would be to be here's our price, and we're just going to mark it up. Here's our fee, and we're going to give you what we get. And then you can get it for hopefully a lot cheaper, because we're seeing $3,000 to $6,000 per unit markups on some of these that we're seeing in the retail space. So, but to your earlier question, I would just say I think speed is probably of the essence. But I don't know. I'd love to hear other people's take on it.
Yeah, Neil from Compass is on stage, operations manager. My personal take is that
get it deployed as soon as you can, because your payback in Bitcoin terms is always going to be decreasing as the difficulty and hash rate increases and as the reward goes down. And then the opportunity cost of capital, if you have to put a whole bunch of money down on a futures order that's not going to arrive till Q3 or Q4 of 2022, look at how much Bitcoin you could have hashed waiting to deploy that capital for a year from now. Yeah. So Neil, what do you think, man?
Yeah, I mean, first I'll speak to the execution factor. We have had a bit of problems with, we had a large facility that got delayed that put about 18 megawatts of equipment on the ground. And whenever that happens, you kind of have to spread things out. We were told that was an indefinite delay. Believe it or not, that is still an indefinite delay. So, regardless, it doesn't make it feel any better, I know, but regardless of what happened, we did make the right choice by pulling out of that site completely and getting the people online that we could. After we did that, we put a lot of steps in place. We have a lot of processes and procedures in place now that have mitigated things like this. We have over 40 megawatts that's going to come online in January, and that's not including the backlog for this month. So those machines should be online very, very soon. Like I think I'll be more relieved than anybody whenever we get that done. All that being said, I do agree. Right now, what you're seeing, especially on our website, the cost of those have gone up because we opened up a marketplace that allows people to sell their miners. Whenever they sell their miners, of course, they're trying to get the highest cost, and then there's an opportunity cost as well. So we don't ever want to hold anybody hostage, So if you want to sell your miner, you can hop on the marketplace, verify yourself, and then sell your miner. So and we let you sell it at what you want. Now there is like a cap in there, but it's just like to make sure it's not. I mean, I know ridiculous is kind of a relative term on this, but if you scroll through and you'll actually kind of go down to the bottom and see that there's actually some hardware on there that we sell. We also have our director of sales who's in the audience, Eric, too, if you want to hit him up. But that's what you'll see whenever you see certified reseller on the site. Those are actually resellers from the marketplace. And then the other ones are going to be hosted miners that you're looking at. So
that makes a lot of sense. Actually, I'm glad that you said that, just because I was noticing it the other day and I hadn't realized that I saw the announcement about the marketplace, but I didn't realize that's what that was. And so that's actually making a lot more sense, because I think I looked at it yesterday or 2 days ago. And I was like, man, these look really high, because I bought some a few months ago and I got like what I felt like was a pretty fair. I mean, it's not as good as what we could get through some of the suppliers we have now, but I thought it was relatively fair. And then I looked at it recently and I saw some pretty high ones. So that actually makes a lot of sense. I'm glad that you clarified.
Yeah, I hope some of those guys are listening. And I mean, like, I understand there's an opportunity cost there, but like, a little ridiculous on some of those prices. But it's a free market, and we wanted to keep it a free market. So all that said, it is about opportunity cost, and that's why these guys want so much for these miners. These miners are online right now, and they feel like, or if you feel like Bitcoin's going to go up and you have faith that it's going to go up in the next month or two, they feel like you might want to pay that much for them. But all that said, me personally, I would kind of wait this month out. That's just me, though.
Quit talking about socialist price controls, you guys. Come on, like it's a free market, and let's be honest, like we're early in terms of ASICs in North America. There's a huge amount of friction to get them over here from China historically, right? But that being said, you can see a lot of guys hopping into the game, like Compass with their marketplace. Steve Barber with Upstream Data is now selling ASICs directly to the plebs. I forget who else is doing it. Lester Technologies, they're starting to become an ASIC broker as well. So let's let the free market work, and the price of ASICs for the plebs will come down once that competition heats up as well, right? But let's be honest, like if anyone has ASICs plugged in right now and they're hashing, it's pretty profitable. You're likely not going to be selling them at a discount, right?
Yeah. No, we definitely make just as much money through the logistics of the marketplace as we do for mining, and that's because we were limited by our scale. But there's a lot of money in between, and I will say it again: always seek higher ground, always go for better density. This is a business. If you want a Bitcoin mine, you have to always be improving. I really mean that, because the network will improve around you. You always have to be seeking higher ground. That's just the reality.
You get some thoughts on using Bitcoin collateralized loans for purchasing this kind of equipment and doing it that way. Any thoughts on that? Like kind of peer-to-peer lending.
I mean, that's what the big public companies have done, but they've done it with banks. You know, $100 million loans on based off their Bitcoin holdings.
But ouch, those interest rates, man.
I was gonna say, for the little guys, the interest rates are awful, right? Like 9%, I think is the best you can find with like salt or somewhere.
Yeah, I wouldn't do it.
Yeah, I think on Celsius it's like a ratio. So like it's like a 25% collateral or 75% collateral, and you can get it down to 1%. But I mean, you know, like 10 grand in Bitcoin, is that really worth $2,500 to you know what I mean? It just doesn't make sense a lot of times.
Get a lot cheaper.
Are you guys all really not waiting with your liquidity right now in hand to buy a fuck ton of Bitcoin equipment here, probably in like January, February? Because I know I'm ready to turn a lot more Bitcoin into equipment any day now. We just turned a whole bunch right now of fiat into as much.
I just totally gave away my wait till January plan.
Yeah, look, come on. I don't mind leaking the alpha here, but this is the cycle stuff we talk about. You sell at the high, you buy more miners.
There are hundreds and hundreds and hundreds of megawatts coming online between like now and March. And so that's the thing is like I see how much demand there is and all the public companies, the big orders going through that they have to actually tell people about. Like I'm worried that the prices on miners don't go down unless we have a significantly large Bitcoin crash that kicks the crap out of all the little miners that have power that's too expensive.
Well, it gets back to what I said earlier, this idea that you can just like, that you can predict the price of Bitcoin. I mean, that's what you guys are saying, right? Is that we're going to predict the hash price. And like, I don't know. I mean, to me, it's like, this is an accumulation game, right?
If you're going to have to do it, if you're going to have to, or if you're choosing to reinvest some of your profits, then you're going to have to pick a time. And speculatively speaking, the 4-year, or more specifically, the block counting, has been a pretty good way to do it for 3 cycles. So unless you're of the mindset that is not going to continue, then, you know, if you're going to use that capital at some point, it's best to try and pick a top, isn't it?
Except every time the market dips, Michael Saylor buys another like 10,000 Bitcoin or some crap like that.
Until he doesn't.
Yeah, this is the only cycle where it's been $1 trillion asset, you know? I mean, we just don't know. I'm newish, right? So I don't know. I've been trying to base a lot of my thoughts around the previous cycles too, but I just don't know that we know.
The great unknown is the manufacturing. What's going to happen with the whole, you know, because there's not a lot of chips in the whole global market and the global supply chain for anyone. That's the big question. Will the manufacturers be making more new machines, or, you know, the output is going to be the same as in the past? Because if it doesn't, or if it does, then things change. You know.
That's what I'm worried about too, but we'll just have to see.
So that's a different kind of chip, guys. Like that's not the same kind of chip. So like ASIC chips don't have the same kind of danger that like a CPU chip does right now. So like whenever we talk about like chip shortages, now don't get me wrong, like getting the manufacturing capacity is not easy, but like TSMC is not going to tell Bitmain that they can't have the same amount that they had last year. You know what I mean? So it's I just want to make sure you know there's an understanding between like CPU chips and the ones that go in trucks and things that we're talking about that are like big shortages and ASIC chips. Like ASIC chips are a very, very simple design that are easy to make.
And as far as the speculative cycle stuff, I understand the thinking that we're coming to a bigger market, the $1 trillion market, things change, you know, but I think we'll always see liquidity squeezes in relation to the halvening, probably at the very least until 2040. And that's just in relation to the block subsidy and the amount of Bitcoin it makes up. But I think we'll also have other factors. And these will be things like these options and these different traditional financial products being called, and large institutions or sovereign funds or countries getting in. So I think we might see like squeezes in between the 4-year cycle. But I think the 4-year cycle is probably a pretty good way to approach logistics of a mining operation, for sure. Like, come on.
Yeah, it's the best we have, right?
And that being said, we also just saw a dip from almost 70,000 back down to 50,000, and I think miner prices went up.
Is that what they call a bearish divergence in dollar per terahash terms? Boys, we got Hodler on the stage. How's it going, man? What do you
Hey,
have to
man,
do
how's
this
it going?
week?
Hey, I have a quick question for Max. I been a grid miner for a while, and I have some family property that has producing gas wells, and been kind of looking into, what can we do here? It's, I guess we're not stranded. We do have a midstream line that runs through the property, some compressor stations around it, and something I haven't really been involved in, but I've started kind of looking at these leases and kind of seeing, is there a better way that we can monetize this versus selling off gas into with the producers? And, just wanted to get some feedback possibly on that. And is there any sweet spot on generator side that makes sense from like a permitting standpoint? I talked to a company that said, if you do start getting into some rather large generators, that there could be some EPA or other permitting issues that you have to address.
Yeah, so you have royalties on this land, right? It's not just surface.
Say that one more time.
You have royalties. You have mineral rights, not just surface rights.
That's right. Yeah, we own the property, and it's a pretty significant amount of gas that's being produced yearly on the property.
Yeah, it's kind of funny. I had an attorney reach out that represents a large ranch owner. I won't say where it's at, but they have a bunch of mineral rights as well. In similar situation, they've got a producer on the ranch, and then they've got midstream and compression. And there's actually a plant there, and they're had the same question, was like, how do we get our portion of the product to then mine with? And we've looked at in the past like what we call take in kind, which is basically you take your proportionate share of the gas in kind. And so to use an easy number like 20%, if you've got a 20% royalty, then in theory like 20% of that gas is your gas. And so you can look at the lease. Most leases don't really have anything in there about the royalty undertaking in kind. I think that you could request it, and then it becomes a matter of where you would want to do it at. Would you want to do it at the individual wells, or would you want to do it on the pipeline? Probably it'd be easier to do it off the pipeline because you could get just more gas at a single location. But it's not real common for mineral owners to take in kind. It's pretty uncommon. I actually have never really come across it. I've come across a lot of mineral owners asking me to. One of the main rubs that we've seen, and this is just as it pertains to traditional selling the gas to a market, is a lot of time mineral owners are getting carried on the cost to market. So they're not having to pay transportation, they're not having to pay gathering, they're not having to pay any of these fees because they have a royalty, and so they get it off the gross, right? And so in the past, when royalty owners have reached out to want to take in kind and sell their own product, it's like, well, if you're going to get your own midstream agreement, then you're going to be subject to all these fees. And that kind of killed it for them. They're like, well, we don't pay those fees today. And it's like, well, you're going to have to pay them if you go through the midstream company, because a lot of times it's the operator of the well that's carrying them on those costs. And so you don't see it a lot, I guess is my point. But in theory, you could go to the operator and say, hey, I want to take my production in kind. You would need probably a group like my company or someone that does something similar to we do to help you navigate, getting to take that gas and market it. And then there'd be a physical element to it as well. You'd either have to have a surface site, which it sounds like you guys may already own, or you would have to tap into a pipeline or set something up to be able to physically pull the gas off, and then you could mine with it. So I think in theory, practically, it could be done. I've never really seen someone do it. And then your other question around the generators, I mean, from an air permitting standpoint, and I'm not an expert on this, but I think if you're under kind of the 10 megawatt threshold, then, once you get above that for a single site with air permitting, it can get pretty tricky. I don't know if like the different generators themselves necessarily make that big of a difference. I know that there are some efficiencies kind of around, like for example, from like a 50 kilowatt to a 350, it's probably more efficient to have like a 350. But again, I'm not the engineer that handles all this stuff, but that's just kind of my high level take on that.
Yeah, I'm dealing with conversations regarding gas mineral rights right now with a couple entities. And it's interesting because, like, if the difference between like gas that can go into a normal gas well, even if the gas is being sold for a lower price, the mineral right owners tend to have it in their contract that it's their royalties based off the market rate of the gas. So this came up previously before Bitcoin existed because, obviously if electricity cost is super high, the people selling the gas it'd be like that. Like, I want to get part of the Bitcoin. It's like, I want to get part of Excel's fee for selling electricity to people. And so you got to look at the contract and see how it's written, and then just make sure that the gas producer is going to fee. If you want to go get a separate contract with the miner directly, if you can get out of your lease agreement, whatever agreement you have for your royalties, and then enter into a new one with the miner directly, that would be a way to go about doing that. As far as the generators are concerned, I mean, the bigger the generator, generally the better efficiency you can get. So like 10 megawatts and above, you can get turbines. Under that, you're probably dealing with reset motors. If you just have a little bit and you want to go quick, like smaller generators are available. Big generators are not right now. So it's kind of a tricky little market. And generally the smaller ones, unless you're getting used stuff or you're finding a good deal, their dollar per megawatt of production, dollar per kilowatt of production is generally higher than the larger generators.
Right.
That makes a lot of sense. So it sounds like the trick is to try to get the gas before it goes into the midstream line. Is that what I understood, Max? Like once you get to the midstream line, you're going to add in a lot of cost.
I think it would be easier for you because, yeah, I mean, like if you're on the midstream, they're going to want their fees, right? And if the operator is currently carrying you on those costs, then you'll have to pay those costs, which will add to your cents per kilowatt for your operations. It's just another monthly charge you're going to have. And so, like, yeah, I think if you go to the wells, I mean, it takes very little gas to mine a material or to generate a material amount of power. And by material, I mean, hundreds of kilowatts. If you want to get to the megawatt scale, then it may be hard to go on a individual well. You might have to pull it off the pipeline to get that much scale. But if you're just trying to do like a 350 or 100 kilowatt deployment, then I would just go to the wellhead and talk to the operator and say, hey, I want to take my gas in kind and I want to lay a sales line and a meter over to a site that's here by the well, and I'm going to set a data center. Would be the easiest way.
That makes sense. I mean, judging by the numbers we have of gas coming in, though, I mean, I'm talking many megawatts. So yeah. I was looking at like 1.3 megawatt generators, trying to do enough redundancy and whatnot to make it work. But yeah, I appreciate the feedback, though, man. That's really helpful.
Yeah, for sure. Send me a note if you need any more help. I can. This is what I do.
Will do. Thanks, man.
You gotta go get that gas that nobody wants, like where I go to. Then you get it on the cheap.
Tarantula, what's up, buddy? You out searching for some stranded gas right now?
Nah, just pulling some S9s to do some firmware updates and stuff. Close off them SSH ports,
Last I saw Hodl, he was making the stranded gas.
Doing it still.
How you been, man? How you been?
Not bad. I'm heading up north from down by Tennessee-Kentucky state line out in the Boone National Forest. I just came off of a gas well, and it's nice weather out today, actually, considering it's this first week of December. So feeling blessed, brother.
A lot of stranded gas out there, eh?
Yeah, we got that good sweet gas off the Devonian Shale.
Yeah, there's a bunch of guys flaring out in that part of the world.
That's cheaper than we're paying, but we can get down to 4 cents Canadian a kilowatt hour on grid here through the BC Hydro. So, certainly stranded energy is always better, but consistency helps too.
I definitely get that, and I think that's right. My goal is to crush and decimate the ESG bull that's out there. And I can do that real easily, though, by grabbing up stranded wells because they release what's called fugitive emissions, that being the methane, if they're not plugged like deeply and capped hard, and that just ruins the asset. But and so by throwing a data center out there and a generator, we can make claim that we're reducing fugitive emissions and at the same time creating an economic activity and taxable revenue for municipalities and jobs for locals, and this is completely crushes the narrative on it being bad like this, because that is in its definition what ESG is, what I just explained. So it's reducing.
I can see the commercials they're running now in their outreach program.
Oh man, they like if you know like the angle, like if you look at what we're doing, it is in essence ESG. Period. I mean, anybody that says anything different doesn't know what the hell they're talking about. Reducing the methane and fugitive emissions, creating jobs. Like, what the hell more socially acceptable and economically, and beneficial can you get? Shoot. The only thing I could think of better would be like to find a way to burn fiat cash into. Just buy Bitcoin. Never mind.
Max,
Yeah,
what do
the
you guys
subsidies
see?
are coming.
Yeah, what are you guys seeing in Oklahoma for the whole ESG narrative, carbon tax, or any oil guys worried about venting, and does that help you, or does the regulatory regime there actually recognize the fact that Bitcoin miners can actually be a net positive to oil and gas sites that are flaring or venting?
We're not seeing a lot of the ESG narrative just in Oklahoma. I mean, it's like, you're seeing it with companies because they have to pay attention, and you're seeing it with capital providers because they're focused on it because their investors are these, whatever endowments, and it's like the teacher's pension plan of California or something, and they're clearly very focused on these things they read in the media, and so they put that pressure on their on the equity guys, and the equity guys put that pressure on the companies, and the companies put that pressure out into their operations and what they do. So that's how that kind of flows. I mean, at a state level, I don't know really on our flared regulations. I don't think you can flare for that all I should know this because I live here, but there's not a ton of flared gas in Oklahoma, and I don't know if it's just because of the regulations, but really Oklahoma is just a giant spaghetti bowl of pipeline. I mean, we've had oil and gas development for over 100 years in the state. It's really the reason why the state even exists, to be honest. So there you don't see a lot of flared gas. You see some stranded gas more than you see flared. And so I think just from the Bitcoin narrative, though, our state needs to be better. I mean, we're getting killed by Texas, and we have cheap power, and we've got a ton of gas. And so that's something we're working on. We've been doing the Oklahoma City Bitcoin meetups, and we're doing, actually was talking to some state reps at this function I got invited to this week, and they're like state level legislators, but they were all very interested. They're like, yeah, we would love to push some kind of Bitcoin legislation through. So I think that's a kind of a side project is I'd love to see our state do more. I'd love to orange pill more of the leaders here. I don't know that I have that influence, but I with the little influence that I do have, I'd like to try to get our state to get more, pro Bitcoin, or at least outwardly spoken about it. Right now, I just feel like they're not even tied into it at all. I don't know how much these people even know what's going on.
Dude, that's great news to hear. We've been getting in Ron Paul's ear. I sent my partner out to dinner with him not too long ago, which is this is excellent news to hear you say that. So yeah, it's but my fear is that the individuals who own the leases on these gas wells now come to find out, that essentially they got this, it's just gold. You want that lease, and you want to be direct on that, not the midstream guy. So that's where your real bread and butter is. And so that's why I try to go after the stranded wells that have been abandoned and stimulate them and see what we can do off of that gambit, because quite literally it's like, you can play the ESG game against them at the same time. You also you getting that benefits that come with that gas like that.
Yeah, absolutely. No, for sure.
You're right about the California hedge funds and everything. All that. I've heard a lot of people talk about the unions putting the pressure on the financial guys and everything else, and playing it up in between about how they're being represented with their investments and stuff. And man, I wish some of those guys would kick back some of the more detailed information about how some of these ESG plays go, like with the lithium mining and the cobalt mining and how destructive that is, and like solar panel manufacturing and the waste that is created when solar panels go bad, how like in the windmills, like in wind farms, when those things go out, man, holy hell. Some of them don't even see a full life cycle to like a return on investment before they actually destroy themselves, depending on the weather situation. But yeah, pretty interesting. How the oil and gas industry is getting involved with Bitcoin mining now, and like I said, my fear is that like if we can't gobble up as many of these wells as we possibly can now, that people ain't gonna want to sell them to us because they're gonna figure out that what they got, and there ain't no secret in this sauce really. It's just you got to have grit and spit and be willing to put it in, and that's how you keep this operation going. And well, that's the secret sauce. And so that's why I say try and get them gas wells or that energy as fast as you can, because the sand is going through the hourglass quickly.
No, they're going to figure it out. They're going to figure it out. They already are. I think you're going to look up in 5 years. And if you look at energy density that's involved with natural gas, it's staggering, right? You've seen these big Marcellus wells that come on. I saw one that was doing an 80 million a day IP, and that's an initial production rate. That's going to drop way off, and it's going to, decline. But if you put that into perspective, what is that? If you were to convert the 80 million a day into energy, you'd be half the size of Riot blockchain from a single well. In terms, you'd be 350, 400 megawatts or something crazy off of a single well that costs $10 million to drill. And I know that's going to decline, so it's not a perfect example. But when you look at all these C-level guys in oil and gas that are all compensated via stock options that aren't in the money because oil's volatile, oil just dropped, and they're all getting their compensation through stock, and they look and see what these public mining companies are trading at, it's only going to take a couple, C-level guys for it to click, and they're going to realize I can create generational wealth for myself virtually overnight because the public market's going to reward me from, converting my energy into hash instead of into a physical product. And I think that is going to be an even more of a gold rush. I think it's just a good old boy industry, and there's a lot of boomers at the top. No offense, but it's going to take some time. But when it does click, it's going to click and it's going to go hard, I think.
So sorry to interrupt.
No, you're 100%.
Correct you.
But
he asked me to mention what you meant. It wasn't a gold rush, but a big.
It's going to be less than 5 years.
Yeah.
We should explain to Hodl Tarantula that it's incredibly rude to interrupt the clergy. Of course, he's forgiven because Satoshi reminds us, do not forgive 7 times, 77 times, but 7 times, 77 times. Which is why we let the shitcoiners, after they get wrecked, back onto the holy chain, of course.
Amen.
Hey, Sovereign and Shannon, good to see you guys. Today, the church's inbox has been overflowing with paper and lettuce hands. It's obviously a time where we come together as a community to try to support these.
No, I'm buying their Bitcoin.
Yeah, I am too. But I serve a dual purpose in this community. So today, I hope you don't mind if I lead us in just a short, brief prayer. I thought that perhaps we can raise the spirits of Satoshi's most faithful. And so Satoshi reminds us, now faith is the assurance of things hoped for, the conviction of things not seen. May Satoshi, the giver of hope, fill you with all joy in believing, so that by the power of the holy main chain, that's secured by many men in this room, you may abound in hope. Do not fear, my friend, for we do not ever see physical Bitcoin. We are all 100% certain exactly how many there are, how many there ever will be. Praise be Hallelujah.
Amen, brother. And let me tell you,
Hallelujah.
miners are the most bullish ones here. Whatever the price is doing, we're still hashing away, and our TCA is literally our power bill. So we're picking up the dip here. Don't you worry.
I don't even care about the price. I don't even look at that. Don't even look at the price. I just plug in more ASICs when I hear it goes down.
Mining is just dollar cost averaging at the cheapest way.
We got Mike and we got Lewis and we got Big Chief. Haven't had a chance to say anything yet. We're happy to have Max here with Ankova sharing knowledge about mining in Oklahoma. So Max, I know if you have to take off, you're welcome to stay around for as long as you want, of course. But before you take off, make sure you give the room a send off. Let everyone know where they can find you, how they get a hold of you. So appreciate you hanging out with us.
Yeah, I appreciate you having me on. This has been great. I really enjoyed it. I liked it. This has been a good one. And I probably will send off here because I got to go here at about 5. But again, appreciate it. And our company is Ankova Energy, or Ankova Digital is the Bitcoin platform. It's ankova.com. It looks like an oil and gas website now. We've got ankova.io that we're working on, that we're going to have that up here soon, hopefully by the end of the year. I also do a podcast called the Talk Energy Podcast. I try to have a lot of Bitcoin mining guests on. I've had small guys, big guys. I've had like the CEO of Riot on. I've had, other off-grid guys on. I've got probably at least 7 or 8 episodes. I'm going to be doing more stuff in the mining space. In fact, I'm going to upload this. By the way, we told everybody at the beginning, but
yeah, you're having the plebs on, right?
yeah, I'm planning on
Yo, that's blessings, brother. That's awesome.
I know I'm recording this, so I don't think anyone said anything bad, but I'm gonna do that. The website's just talk.energy, but you go to the YouTube or just go to the podcast channel and do Talk Energy, and you can get it all there. But man, I really appreciate you having me on. I'll probably slide off here in a minute, but thank you guys. It's been fun.
Yeah, we appreciate it, man. It's awesome, and yeah, we'll see if you edit out that last prayer from our priest.
No, it's
that'll be
good.
pretty funny. Mike Lewis, Big Chief, what's up, boys?